Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video it's election time, plus updates, a special webinar, and two stocks to watch. This is for the week of November 7th, 2016. Before we get into the updates, just one quick note. My main PC has been crashing, having a lot of problems with it. So I recorded a beautiful video on that machine, but then, of course, it crashed and right in the middle of processing. So I'm not able to use that video. So I had to download the screen capture software onto my laptop, etc. A whole big thing. So that's why you're seeing the TechSmith um, watermark on here. That's number one. Number two, the audio may not be as good as it usually is because I'm using the internal microphone of the laptop. And the third thing you just heard, I'm not going to go through and edit out the mistakes. So you're going to get it raw and unedited, which it usually is anyway, but sometimes I like to cut out the pauses and the ums and ahs and all that stuff. For this, it's just going to be everything all jagogged into this video. All right, so let's start with the updates. And I'm going to go through this whole list here, even though we haven't talked about a couple of these in a few weeks. So Shutterstock, nice strong move here. It was setting up for further upside. It hit the 50-day. It came up, failed to take out this last high, and then look at what happened. Just completely waterfalling here down to the 200-day moving average. So I want to watch the 200-day moving average. It's not an auto buy there, but we want to see what happens. Does support come in? Do they shred it? Does it hang around there a little bit before it bounces or continues lower? But the 200-day moving average, key moving average, we'll talk about that in a few minutes. We'll talk more about that in a few minutes. And while we didn't really talk about these stocks, I want to go over a couple of the big high flyers and show you what they're doing too. They're getting hit also. All right, here's Amazon. Here's Alphabet. I almost called it laptop. I have no idea why. Here's Apple. Okay, here's Apple pulling back here. What else are we looking at? We're looking at like a Goldman Sachs is holding strong. Okay, because the financials are actually sticking around here, and that's going to be more to the point of what we talk about at the special webinar we're holding. More on that in just 1 second. Twitter. You can see Twitter popped up out of this coil but did not go much further. Now, Twitter is a double-edged sword in my opinion. The bids or the rumors of it being taken out didn't happen, but the fact that people are talking about buying Twitter means it could still happen. Okay, maybe they're waiting for price to come down, they can get a better valuation, but it's not enough to just buy on. But right here, I would be watching if this 200-day moving average fails as a potential shorting opportunity. And I don't know if you want to short the stock, you want to sell calls, you want to buy puts, you want to do spreads. That's up to you. I have no idea what your risk tolerance is or what kind of trader you are. But just be careful with the naked short here, because while I do think it can go down to the 14 area at a minimum, if something comes out that Twitter does decide, somebody decides, hey, let's buy Twitter, then it could be an ugly short squeeze. So limiting risk is always, and I don't know if selling calls is the smartest idea either, but I mean, if you're doing it with a spread, something, and you're limiting your loss, it's up to you, of course. Like I said, I have no idea what your risk tolerance is. This isn't tailored investment advice or anything like that. You have to do your own research and work. Ring Central, push down here, coiled at the 200-day moving average. Position says it should go lower from here. However, the coil says we got to watch for a move potential either way. You got support down here at 1855 if it does decide to continue lower. G3. Okay, so G3, nice trade here. We did the analysis back here, broke down. Now it's in another flag. See if this could break down. We have support at 2275. WebMD talked about this one. First short may have stopped you out, but then last week it pushed down again. So if you were able to take advantage of that, it's coiled up here. Still think it's going to go lower, but really have to get through that 48 level to start cooking. BVX took out the highs up here. Okay, but that was it. Just took it out, then reversed intraday. But that's all right. I mean, it's still a pretty nice move here. About a dollar gain on a $4 and whatever it is, 75-cent stock or whatever it was. Almost a dollar gain. Now it's pulled back. Watch the 20 EMA, see if that holds. And then Athena Health, we talked about this one. This could be in a same direction flag. So this was the impulse, and this could be a flag set up in the same direction of the impulse. And usually flags go counter to the impulse or sideways. This could be a very strong move here, but as always, wait for confirmation. And yeah, it's very oversold, so it may get a bounce. Got to watch for that as well. All right, but again, I would only be looking at that as a trade, as a short-term trade. And then Now Inc., no trigger, no trade. It did not break out here. Instead, it got cracked. So this is obviously off the list, but waiting for the break was the key in that one. And then I have two new stocks I'll talk about in just a few minutes. Let's talk about the special webinar. The special webinar was going to be Sunday, November 6th, but instead we've moved it to Monday, November 7th. Paul wants to get it in the last day of trading before the election. Now, right now the time is 8:30. It's tentatively scheduled for 8:30 p.m., but it could be pushed back a little later to maybe 9 o'clock. It's not going to be earlier than 8:30 though. The way to find out how to join the webinar, how to partake in the webinar, it's absolutely free, is you go to the site attackthemarkets.com. You'll see it up on the screen here. Attackthemarkets.com. Put in your first name, your best email address, and then look for further directions. You'll see another page, and that page will give you instructions on what to do next. You have to go to your email. You have to find the email we send you, and then you click on the link, and then you are subscribed. Just a quick note, my other email list, I send out multiple emails a day. I talk about the market a lot during the day. This list is not going to be like that. You should only expect about one email a day, and of course there will be exceptions. If there's something breaking that I feel is important, then there may be two emails a day. And of course, the days of the webinar, there will be multiple emails. So I apologize in advance. I know a lot of you don't like multiple emails, but when it's the day of the webinar, I'm going to send multiple emails because they could get lost or they could get buried under other emails. So you'll probably get a couple of emails that day. Okay, so just as a heads up, because I know that I've been getting some comments and hey, I don't like all the emails. So this brings it down to one or maybe a couple, like I said, on the day of the webinar. So the webinar is going to be all about how Paul and I feel the market will react after the election, depending on who wins. Paul's going to give a thorough look at the sectors like he always did. When we're doing the Sunday night strategy sessions, he'll look at the internals and he'll give his opinion on what he sees now on the short, intermediate, and longer term. And I'm going to also be chiming in as well. So we look forward to seeing you there. It's absolutely free. You can ask questions after Paul and I speak. You can ask questions and we'll look at some markets for you and maybe even take a couple of stock requests. So all you have to do, like I said, attackthemarkets.com and sign up there. So let's talk about the market real quick. I want to show you the VIX. The VIX has been rising a bit, and it cleared the September highs, and it looks like it could be headed for the June highs. Now, this increase in volatility is good for people like me who like to day trade. I like to day trade futures. I don't day trade stocks. If I'm looking to trade stocks, I'm looking to swing trade them, okay? But the volatility is good because the moves tend to be bigger and they tend to be more dynamic. Now, of course, the flip side of that is if they're more dynamic and if it's more volatile, the risk rises. So you have to lower your size and expand your stops in order to accommodate that. But if you are a multi-lot trader in futures, and that could be as little as 2 or could be as 200, whatever you trade, I don't know. But it's easy to scale back. Okay, it's easy to say, okay, well, I'm going to double my point risk, and now I can cut my size in half, and I'm risking the same amount. All right, and you could do it even more than that, depending. I mean, if you're trading in increments of 3, or if it's divisible by 3 or 4 or whatever, you can, of course, continue to reduce your size and adjust your point risk. That's why I love futures so much. I'm actually working on that e-mini course, and it should be released the beginning of the year, but more on that when it happens. So anyway, so with the VIX rising like this, there's no real number that says above this is bullish, above this is bearish. I'm sorry, above this is bearish, below this is bullish. See, I told you I'm going to make mistakes here. But what I do watch is I watch that 30 level, because once we get above 30, I want to take a step back when it comes to risk on the swing trades, when it comes to risk on overnight trades. All right. So not really looking for, oh, over 30 is bearish or whatever it is. What I do when I'm looking for bullish and bearish reads off the VIX, I'm looking for how the VIX is, sorry, in relation to the moving averages, to recent highs and lows, to the Bollinger Bands. I go over all that in the mini course, which, like I said, is coming out soon enough, so you'll hear all about that. I also like to use it intraday, watch how it's trending intraday. All right, so the VIX rising is opportunity. I believe that the volatility is going to stick around for a while through the end of the year. Now, of course, there'll be dead spots around the holidays, etc. But I think after the election, I think it could get volatility could take a tick up. So I think it's going to be some great trading opportunities. Great week this past week, and I'm looking forward to more of it in the however many weeks we have left, 7 weeks, 8 weeks. I don't even know how many we have left, and you can't even count the week of Christmas or whatever it is, but because it usually dulls down there or something. But whatever it is, it looks like there's going to be some nice opportunities. I'll talk more about the markets and all that on Monday night. But real quick, the SPY headed to the 200-day moving average. Remember what I said a few weeks ago in the video that, I think that we're going to get that pullback to the 200-day moving average because people want to hedge themselves. They're nervous about what's going on. There was talk this week about, if Hillary Clinton doesn't win, it's bad for the market because the Goldman Sachs poll or whatever it is was pricing in Hillary winning, and the fact that, with all the scandal going on now with the FBI and everything else, that could hurt the market because the market does not like surprises. Everybody's expecting Hillary to win. If Hillary doesn't win, then it's like, hey, what the heck happened here, and what are we going to do about it, right? So, but what I said is, pulling back to the 200-day moving average still puts the large time frame traders, the ones that, let's say, invested the beginning of the year on the dip in January or the end of last year, they're still profitable here. So it's not like everybody's throwing everything overboard and getting the heck out and, let's get out of the way. Oh, this isn't a crash. It's a pullback, and it's a pullback to the 200-day moving average. I have no idea what happens here. Okay, I'm not predicting that we hold it and bounce. I would prefer something like this to happen where we break through it and then remount it, because that causes the most amount of pain. And when there's a lot of pain, there's reaction. All right. Now, it's not like pain where people they just keep buying, 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 and it goes up. That's one kind of pain, right? If it starts to dip and you're long, people like to hold forever. But shorts, they like to get out of their pain a lot quicker. Right? There are some people that still hold short forever and all that, whatever, until they get blown out, whatever it is. But when something like this happens and a key support level is broken and then it gets remounted, it can lead to something like this, a really nice squeeze. I don't know if that's going to happen here, but that's the nicest setup, in my opinion, the one that can cause pain and therefore lead to the best relief rally. All right, so could we just rip right through this and keep going and not get something like this? Of course. Could we bounce off the 200-day? Of course. I think we're going to breach it, but I want to see if that breach holds. More on this and a lot more on Monday night. Okay, so attackthemarkets.com to sign up for that webinar. Let's look at two new stocks. First one is AMKR. That's Amcor Technology. This stock has been on a really nice run here. May need a few more sessions here, which is fine with the election coming up anyway. See what sets up. Always wait for triggers on these coils. Don't just try to guess here. But this one looks like it could be headed for the 12 area if it sets up and confirms. Gotta wait for the trigger. And the second stock is Polaris Industries. And this one I like actually on the downside. I like this one on the short side here. You could see that it had the impulse down, including the gap. It came back, filled that gap, but now it's coiled up right here. If this breaks, look for this to move down to the low 60s as a first potential target. Okay, so have a great trading week. I will see you Monday night. New email, tiny@attackthemarkets.com. Have a great week. See you Monday.